For more on the state of U.S. housing, we are joined by Brad Hunter in Fort Lauderdale, Florida. He is the chief economist and national director of consulting at Metrostudy, which specializes in researching the housing market. Now, Brad, we're seeing indications that housing is getting on a better path right now, but do you see this as a temporary blip, or is this really a solid recovery we're witnessing right now?
Well, Karina, a lot of people are concerned that we don't have enough job creation going on in the U.S., and some people are saying, well, this is a bounce in housing, but I think it is going to be sustained. I do think the job growth is going to come. It might take another 6 months or a year before we get really strong job growth in the U.S., but in the meantime, households are forming. What's happened is over the last few years, very few new households got formed compared to historical norms. Going forward, a lot of people who had doubled up, took on a roommate, or moved in with mom and dad are going to come back out and form their own households, and that is going to continue to support housing demand going forward in our forecast.
And talking about prices, we've seen that they've bounced up quite nicely this last month compared to a year ago, but still they're not at levels that they were before the bubble burst. Do you see prices rising much more, or is this going to be a gradual recovery in terms of home prices?
It's going to be a mixed bag. In certain markets in the U.S., I think you will see a much stronger rebound than in others. What happened is in a lot of the markets that were really badly hit by the bursting of the bubble, you had an overshoot on the downside, we call it. We shot down too far. So in markets like Fort Myers, Florida, for example, home prices were close to $300,000 at the peak, hit $89,000 as a median price a couple of years ago, actually about 1 year ago, and more recently it's been going back up to around 125, close to 130. So it's really moving up fast in a market like that. Las Vegas, Phoenix, the same kind of phenomenon.
Okay, and in terms of an investment, we've still got very low mortgage rates and the prices are still pretty attractive. Do you think right now is a good time to get in there if you want to invest in housing?
Yeah, and there are a lot of ways to get involved in investing in housing. A lot of people are buying these $50,000, $60,000 homes that are being sold in Las Vegas and Phoenix and Florida and trying to flip them, or most commonly people are trying to rent them out and get the income. And these days, the ratios are very much in favor of that. That is to say, you can buy the house at today's interest rate, even paying a premium for it being a rental investment property, and you can still make a nice rate of return on your cash flow, and that's what's attractive. And then if people get a back-end bump because they sell at a premium after they're done with the property, then that's gravy. They get excess return that way.
So the days of flipping it are behind us, but perhaps if you want to have a rental property, that might work. Lastly, if we're seeing that housing is on more solid ground, what will that do for the broader economy? Which sector will particularly benefit from the fact that housing is stabilizing?
Well, housing feeds into so many sectors in the U.S. economy. It's going to definitely drag the economy upward as housing continues this bounce. You know, if you think about it, furniture, tile, lumber, roofing materials, draperies, all those things come up. Appliances and furniture, all those industries are going to be boosted as home construction increases. And we're expecting a 17% increase in the next 12 months in single-family construction and probably more than a 20% increase in multifamily construction in the next year.
Okay, so many ways to play that market. Thank you so much, Brad, for joining us today.